There is roughly $96 trillion in money on this planet, $471 trillion in global wealth, and over $1.7 quadrillion in total assets across the entire globe. For decades, the world's wealth has been locked in silos, brokerages, custodians, and tracked on spreadsheets. But now that wall is breaking down. You have Larry Fink of BlackRock, obviously one of the world's most powerful, if not the world's most powerful financial institution, saying that all global assets are going to be tokenized. The next financial revolution isn't coming. It's already here. Well, we might as well start with the whole purpose of filming this video. I'm going to play a short clip for you, then we're going to run through some pretty crazy global stats about all the world's money.
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities to bonds across the board.
The tokenization of all assets, from real estate to equities to bonds across the board. To understand how big that is, I want to kind of zoom out for you guys. And let me share my screen here for a second. There's a couple of different sites you can go to find out how much money is on the entire planet. This is a good visualization from 2022 that really breaks it down from Sam Bankman-Fried all the way to the world's billionaires, central bank balance sheets, real estate. You get the picture. But physical cash essentially represents, and this is another good one, this is more recent. Physical cash represents, let's say, $8 to $9 trillion, banknotes and coins in circulation. Broad money, or M2, 96 trillion. Global equities, 120 trillion. Global bonds, 130 trillion. Real estate, we've said this many times on this channel before, 300 to 400 trillion. This says 330 trillion. Gold, 25 trillion. This number is probably a little low given all the, maybe it's not, given the gold breaking all-time high, and the same thing with silver recently. Crypto, 4 trillion. Might be a little bit high right now, given the correction recently. Derivatives, 600 trillion plus. You add all of this up, and you essentially have humanity's total balance sheet. It's like 1.7, give or take, quadrillion dollars. Now, for the first time in history, that entire value base, and you heard BlackRock's Larry Fink essentially telling you everything's going to be tokenized. Every share, every bond, every building is being re-architected for blockchain rails. Now, BlackRock has just announced their tokenization strategy kind of on top of this as well. For some context here, in Q3 2025, BlackRock reported $13.5 trillion in assets under management. That's up 11.4 trillion the year from the year before. Their Aladdin platform, this is where their numbers get really interesting, is essentially the operating system of Wall Street. We saw Aladdin integrate with, I want to say, Coinbase Prime a couple of years ago as well. The Aladdin platform that BlackRock operates tracks roughly $21.6 trillion in assets for the top 1/3 of clients on that platform. So that tells you that that platform alone has many more assets tracked than 21.6 trillion. This year, Larry Fink confirmed, and we just saw that clip too, they're building in-house tokenization infrastructure, saying, quote, "It is our belief that we need to move rapidly, not just financial assets, but all assets." One of BlackRock's first major steps was their BUIDL fund, launched with Securitize, a blockchain transfer agent backed by BlackRock itself. That same infrastructure is already powering initiatives like USTY on XDC network, providing access to a BlackRock-managed U.S. Treasury yield fund through Securitize's tokenization rails. In short, BlackRock's money market and treasury strategies are already live on chain. So for them to make announcements like, hey, we are building out this, and this is no joke, and all assets will be tokenized, this isn't just, again, one of these kind of niche things that we see talked about in crypto. This is happening right in front of our very eyes. We also have infrastructure layers kind of developing out all throughout the globe. We have, which we've mentioned many times on this channel, DTCC and global derivatives. We've got players in blockchain on public networks or in public networks like Chainlink, Ripple, Hedera. We have recent announcements with the NASDAQ. We have recent announcements with Ripple and Ripple USD. We have recent announcements with Archax and BlackRock and State Street funds going live on Hedera through pool tokens as well. So this transformation isn't isolated, and I'm certainly missing tons of examples out there throughout the crypto space. This is a systemic upgrade like we've talked about. DTCC, the Depository Trust and Clearing Corporation, processes nearly 2.5 quadrillion in annual securities transactions, rolling out a new digital asset infrastructure, permissioned blockchain and smart contract platform for U.S. market settlement. You can look at some of the things that they have mentioned on here about tokenizing quadrillions global assets with centralized control. There's literally patents out there for what they're doing, but the goal essentially is to replace legacy post-trade processes with atomic settlement using tokenized assets and stablecoins. Then you have Chainlink integrating directly with DTCC, integrating directly with Swift, and now as of today, integrating directly with S&P Global. S&P Global Ratings and Chainlink collaboration, bringing S&P stablecoin stability assessments on chain with Chainlink. So you essentially have a collaboration here. The world's leading provider of credit ratings, benchmarks, and analytics is now utilizing Chainlink, the industry standard Oracle platform, to deliver S&P Global Rating stablecoin stability assessments on chain via data link, an institutional grade data publishing service powered by the Chainlink data standard. You know, this is absolutely massive stuff, and it shouldn't be a surprise to any of you guys because we see this time and time again. But essentially, this announcement with Chainlink and S&P, they're bringing credit risk analytics directly to decentralized markets at this point in time. Ripple's Ripple USD stablecoin and CBDC settlement platform, enabling cross-border tokenized money flows. Obviously already connected to pilots and financial institutions all across the world. As I mentioned, Hedera, again, hosting Archax's tokenized BlackRock funds, State Street funds. There's overlap with Archax's tokenization engine from way back in the day. So you always have to wonder what stuff is running potentially on Hedera Consensus or some other aspects as well. And then we mentioned XDC. Franklin Templeton's Benji investments and on-chain U.S. government money fund are live tokenized mutual funds. The first registered funds in U.S. history to issue share classes on public blockchains. BNY Mellon, America's oldest bank, offering digital custody for traditional and tokenized assets. BNY Mellon, also the custodian of Ripple's Ripple USD. This is like the world's most powerful institutions already connecting through distributed ledgers. So when we get into the big picture of where we could be going here, how this new architecture could potentially operate, and really kind of what is the value here. If even 10%, let's say $170 trillion move on-chain by 2030, and I'm not saying that that happens. I'm saying that that's a broad statement here from me. And blockchains capture just 0.5 basis points in fees. That would essentially be $85 billion in annual blockchain revenue. Now, you can apply some different math to this, like a 25x multiplier, and you would get essentially $2 trillion in infrastructure value. The liquidity layer, stablecoins, tokenized treasuries, data oracles, and interoperability protocols, and the total crypto market could easily reach $10 to $20 trillion. I've mentioned multiple times on this channel, I think 3.8 or 4 trillion or wherever it's sitting at right now for the total crypto market cap is just a drop in the bucket of where we're potentially going. And although these blockchains won't own these assets, all of the settlement infrastructure, all of the, new kind of fractional ownership aspects, liquidity pathfinding, all that stuff's going to be operating on these public networks as well as probably private networks too. So you have to kind of deal in some of that value there. So this isn't like just hype. These are like simple kind of math things you can do to try to figure out, hey, what type of value could some of these public networks like an XRP ledger, like a Hedera, like an XDC network, or pick whatever network you like. Avalanche is big in RWAs. and start doing some numbers. For 50 years, markets were digital but fragmented. Billions of databases reconciling the same trading processes. We are literally like kind of at the cusp of the first time in history of having value itself becoming native to the network. Tokenization eliminates settlement delays. We just saw yesterday or the day before, I mentioned the European Central Bank had that document out, or Bank for International Settlements with the Dutch Central Bank saying, hey, yeah, distributed ledger is 100% going to eat everything's lunch, but it is going to take a tiny bit of time to roll out. But tokenization and DLT eliminates settlement delays, enabling fractional participation, merging global liquidity. The implications are obviously absolutely huge. And even just today, S&P data on-chain through Chainlink. Imagine an announcement like this 5 or 6 years ago. Imagine a Ripple USD announcement with Franklin Templeton a handful of years ago. Imagine, treasuries and XRP a handful of years ago, given all the context around the court stuff. I mean, there's no way. But it's obviously that crypto isn't an experiment anymore. Larry Fink said it. We plan to tokenize pretty much all assets. All assets need to be tokenized. What he didn't mention is that it's already happening right now. I've shared with you guys rwa.xyz, and that gives you a picture of just how early this space is. Right now you're looking at $33.84 billion of tokenized assets. We just talked about it on here. Essentially you're going to be getting to all assets tokenized. A good example too is like gold's already tokenized and living on a lot of different networks, but you kind of get the picture here. This is visualcapitalist.com, all the world's money. You can kind of go through 2022 and it shows, at least a little bit of a snapshot. And then this is an extra one. I'll share these links with you guys. How much money in the world is in 2025? Global public and private debt, 251 trillion. Crypto market cap is 4 trillion. Gold, all above ground, 25 to 28 trillion. It's pretty wild. These systems, I know a lot of people were saying that crypto is going to replace the traditional system and that certain crypto assets are going to just take on all that value. It's kind of like nonsense. These, at least in my opinion, maybe they're right, but in my opinion, it's nonsense. I think that the traditional financial players probably aren't going anywhere. They're pretty much fortified in their positions. And we've kind of seen that too, because a lot of these entities are controlling the way that regulations shake out too. So they're not going anywhere, I don't think, but it'll be interesting to watch which networks start absorbing some of that value on chain, and not just on these private networks, because that's really not the point, but on the public networks. And then what is that value? But we mentioned 1.7 quadrillion foundation of the global economy is being integrated into blockchain rails. It's not speculative. It's actually like occurring every single day that we do these videos. We can see that it's occurring. The world's wealth is going digital. And we do know that there is like this transitory period between wealth transitioning between kind of the older class, the wealthy, and kind of the new incumbents that are going to be sitting in those positions over time. That'll be interesting to watch shake out as well. I'll share some of these key data sources here with you guys, but again, pretty interesting. Global M2 liquidity, 96 trillion. Global financial assets, 305 trillion. Personal wealth, 471 trillion. Gold, 25 to 28 trillion. M0, 1, 2, and 3. Then we talk about crypto, obviously, as well. And again, let me see if I can share my screen one more time before we ramp down here. Maybe I'll just close with good old Larry Fink. All right, we'll go right here, share.
There's $4.1 trillion of money sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize an ETF, digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years as we start moving away from traditional financial assets by repotting them in a digital manner, and then having people stay in that digital ecosystem. I do believe.
I mean, what he's talking about is exactly what I think, what's probably going to end up happening. And, for those of you guys that have been in crypto for a while, we see these use cases that just seem to be way too early for their time. I think like fractional ownership, when we think about tokenization of fine art or collectibles or luxury goods or whatever it is, that is a 1000% a use case that we've seen publicly out in the blockchain space that just didn't catch traction for whatever reason or other. Really, the only reason is it just wasn't ready for the mass populace because most people not in crypto aren't kind of here yet. But when you start seeing like the BlackRocks, the Franklin Templetons, the Citigroups, all the NASDAQ, all these entities we've talked about just in the past couple of weeks, basically integrating blockchain, marketing their products just in digital form to their entire client base of basically the world, then it becomes a lot easier for people to be like, oh, I'm used to this. And then I guarantee you a handful of years from now, we start seeing, hey, I can own 0.00001% of this Lamborghini, or I can own 0.00001% of this Pablo Picasso painting, or whatever it may be. Tokenization of luxury goods and all that stuff's going to come back, and it's going to come back in a very strong way, probably eventually. And he's really talking about getting these people in a digital environment where they can consistently be, consumers. We are already in that environment from an attention standpoint. The internet did that. Social media did that. Probably not like the best thing for humanity to have went through. But what blockchain and distributed ledger and crypto really represent are kind of the financial aspect of the internet. Really tying all of that, what happened in the internet with information, into essentially money and assets. And it'll be really interesting to watch what happens, because I think people's portfolios and people's lives, especially with AI converging into crypto, like I said, I really think we're probably headed towards like a personalization of the way that we financially live our lives out, because every single person's life is financially different. We all know what AI can do and what it probably will do. And when you pair that with something like blockchain and distributed ledger, speed, immutability, and all the stuff that it brings, and all of this liquidity is interoperating between public networks, the traditional incumbents, probably there's private layers into this as well. It's going to create a really, really different kind of an interesting society, especially the way that we kind of live out our financial lives. Before I close out here, let me share this, because this is a little bit of a longer one. We've done, and I didn't get to some of these. Hedera is leading DEX, and full disclosure, Genfinity has a media partnership with Hedera in the ecosystem. So do your own due diligence. We don't have a media partnership with Saucer Swap, but we cover a lot of the ecosystem. So the leading DEX on Hedera, and a huge shout out to the Saucer Swap community, team, everything else. These guys just hit $5 billion in total volume on Hedera, which is absolutely huge. They just announced iOS beta. I think if you are interested, you can go onto their Discord and test it out. We have all the links on genfinity.io, but certainly go to their official links as well on X. Also saw this Ripple X Attackathon. This is pretty cool. Strengthening the future of institutional lending. Ripple and Immunify launching a $200,000, not hackathon, but attackathon to secure the XRP Ledger lending protocol, inviting global security researchers to test and strengthen institutional DeFi architecture. So Ripple X and Immunify launching this kind of $200,000 reward pool. This is coming out of Ripple X. Our program is running October 27th to November 24th, inviting security researchers to review 35,000 lines of C++. So pretty cool, though. And then also, Binance is, you can go to genfinity.io and read all this stuff. I'm kind of just doing this here at the end. Binance supposedly launching a $283 million compensation package to protect users affected by the recent $20 billion crypto market crash, implementing new securities measures and risk controls. Definitely double check all this stuff, but it looks like there was already a disbursement. Recent token depegs during the crypto crash. That's coming out of, I guess, crypto or whoever Crypto Times is. And then as we kind of close down here, I mentioned this yesterday, but this is obviously huge. Citigroup is going to be rolling out cryptocurrency custody services in 2026. And Citigroup, obviously, absolutely massive. So don't really need to talk about how big Citigroup is. Again, we already did that video. I will say I'm doing an interview tomorrow. It's going to be a Hashpack interview. Genfinity has a media partnership with Hashpack too, so full disclosure there. Biggest wallet in Hedera. But I'm actually doing an interview with Miguel Valles. Some of you guys probably remember him from, he ran XRP markets at Ripple. And he's essentially trying to build out community engagement platforms across different ecosystems. And he's doing it on Hedera right now. So that'll be an interesting interview. I just did an interview with a retro gaming platform on Algorand on Genfinity.io today on X. So you can go check that out. And then I'm trying to work slowly on, like I mentioned to you guys, the Andre Casterman, former Swift executive for like, I think 15, 16, 17 years, something like that, out of the XDC ecosystem. And XDC was just at Sibos alongside Quant, which I still have had zero luck in getting anybody from Quant onto an interview, but I'll keep trying. Anyways, global assets being tokenized is huge. BlackRock essentially telling you what's coming down the pipeline. And yeah, I mean, it's happening. And it's going to happen on public networks as well as private networks. It'll be interesting to watch where that value capture goes. And yeah, I hope you guys enjoyed this video. I will talk to you when I talk to you. Thanks. Bye.